And I don't know. All right, I'm gonna let everyone in. We already got 12 so far, which is great. I'm gonna give a little intro and get you guys teed up
Perfect.
here.
Yeah, and it's Merill Chandler.
Thank you. We got some new faces in here today. I love to see that.
Nick, I'll be right back, okay?
You got it, brother. Hey everyone, how's it going? Thank you so much for
Nick.
jumping in. Hey
Hi.
Carla, how you doing today?
Doing good.
Nice to see you again. And everyone else, thank you so much for jumping in with us. We really appreciate it. I've got a great guest here today. His name is Merill Chandler. He's the handsome man at the top left.
Well,
Yeah.
you must be looking in the mirror at this point. I don't know.
Oh, that was myself. That was
Yeah.
myself. But no, Merill offers a really cool product and a really cool offering. And he's going to come cover some ninja stuff with us today that's going to get us prepared. He does offer a white glove approach himself, or today he's just going to drop the nuggets that we need to get it done. Now, what he specializes in is preparing you to get approved for bank lines of credit. Right. And just to relate this to my own real world scenario, okay, because I told him about this earlier on the phone, is I'm actually going to be using his preparation and his product because with me, I have some big things I want to do with my house. Right. But I don't want to take out a mortgage or another line of credit or anything like that because I make enough money where I could pay it off quickly. I don't want to pay 30 years of interest on this little upgrade I'm going to do. Right. I just need the money for a year, for example, right? So for me, in order to do this, it's going to cost me $500,000. Well, I can get a mortgage that uses the collateral of the property, or I can go to a bank and get like a business loan. And the reason why I would get a business loan is because my business is so big and successful. It's been around for so long. So it's generated all this income. So the banks love me and they trust me. And I could still get a decent interest rate. So, in a real world example to use what Meryl's about to cover with us is going to be to use these funds, leverage our business line of credit, and then accomplish our goals through that. Now, the good news in real estate is it churns quickly. So as we get the loan, we close the deal, we pay off the loan, and it doesn't have to sit for a year. So I know I'm doing a lot of talking, but I just wanted to correlate.
Well, I don't need to say anything, Nick. You just and that's my presentation for the day.
But I wanted to share with you guys how I plan on using something. So if you're thinking to yourself, well, how does this apply to me? Or how could this work? That would be a perfect real world example. And that's actually something I'm doing right now. So anyways, I wanted to get Merill in here in front of all of you guys so he could share this knowledge with you. So Merill, if you want to take it away, me and Francisco will be here to ask questions and moderate.
Perfect. Thank you. And by the way, if we can now, Nicholas and Francisco can jump in and reemphasize or ask a deep dive question. But for all of the rest of us participants, I'd love to wait till the end. So you can write your questions down in the chat. We'll review that. I want to be able to create the flow that we need because this is very simple, but there are a lot of moving parts. And I've distilled this down into a system. So first thing I'd love to share with you is kind of how this whole process came to be. I'm sitting there at a business conference one day, and we're at the end of the day, and you guys have all been to them, and we're having our dinner that's been provided, and we're sitting around talking to other participants about what they are, what classes they like the best, or what speakers they were charged up by. And a gentleman came and sat down next to us, and he was listening to us talk about our different businesses. And he asked me, excuse me, my name is Will Lansing. I'm the CEO of FICO. Yes, that FICO. Would you kind of explain your business model a little bit better? And I said, or a little more. And I said, I help borrowers, especially business borrowers, become fundable so that they hit the underwriting criteria of lenders. And he's like, well, my clients are like the top 50 lenders in the country. And will you please give me a little more detail. So we go through this. Now, you guys got to appreciate this. If credit and financing and funding is Mount Olympus, I am now talking to Zeus, right? I am talking to the man. And he's asking me questions about the business. And he said, would it be okay with you? I would love for my personal and business score development teams to review your process and fill in some blanks if that would be helpful to you. Of course, now I'm literally falling on the floor. I'm not kicking my partner under the table. This is insane. This is like a peak business experience for me. And not long after, we arranged to meet with the score development teams, and later on, you'll have an opportunity to see all the pictures. I'm like recording this entire thing. This was insane. And we found out that we got to ask over 100 questions about how to tighten up what we were doing for folks like you. People who didn't know how to get approved for a loan. All you do is you go in and you fill out an application and you just pray for rain, right? You're just like, okay, credit and funding gods, please be merciful to me. And it's way easier than that, you guys, way easier. So that's what we're talking about today and I am, it would sound arrogant if it weren't true, but so I'm going to bust out a few things from some FICO quotes and people who have the very team members who have helped me build what you're about to hear. So I'm going to share my screen right now, and let's go to, let's see here, share desktop. Okay, so what we're talking about is exactly how to level up your real estate investing by acquiring and using prime plus 1%. So when Nicholas was saying that this was relative, it's not as inexpensive as HELOC money, but it's the next best thing. Unsecured stated income from top tier banks. These are credit lines and loans from top tier banks. And we've had it as low, as quickly as 120 days, but that all depends on your situation and what your needs are. And so we'll discuss some of those parameters. But when I say stated income, I mean no collateral, no tax returns, and no financials. So anybody, you can type in the chat, anybody interested in knowing how to get that? This is write a check and do a deal kind of money. Unlike private money and hard money, no one's looking over your shoulder to see how you use it. Carla says yes. So awesome, Carla. Thanks. Nobody's looking over your shoulder to see how you're going to use it. And so we're going to discuss today in the next 45 minutes or so what that means, why that's true, why they don't care how you use this money. So let's go. Now, I'm going to bear with me. There's a reason for saying this. Bear with me. But what do you, as a real estate investor, have in common with the adult entertainment industry and with fortune tellers and with casino and gambling sites? Any ideas? Any ideas what real estate investors have in common with those three industries? It's because you are what lenders call a restricted industry. They will not lend unsecured stated income bank business credit lines to you when you present yourself as a real estate investor. So my promise today is that I'm going to show you how you can get a portfolio of business bank credit lines worth over $300,000. It could be more depending on your situation, but I just want to be conservative, in 120 days or more, depending again on your situation. Our strategies work for multifamily, fix and flippers, buy and hold, note buyers, wholesalers, but also any and every business owner who implements these steps. All right. Now, I personally know that this works because I've done it for myself. I've acquired over 224, excuse me, $2.4 million in these very business fundings that required the exact things that I'm sharing with you today. I also know it works because I've helped my clients and members of my community, just like you, get over $300 million in these funding approvals, credit, financing, and funding, personal, business. We can, once you are what we call approval ready, you're approval ready for anything that you want. And we have a spectacular reputation. If you looked at our Facebook page, but I looked at our comments, we have testimonials after testimonials after testimonials, all of whom swear by the education and the process that I'm sharing with you today. Now, kind of going to go to ground zero. We all know, I'm assuming we all know about our FICO score, but who is FICO? Well, FICO software is used in over 90% of all personal and business lending decisions. So if they say something, we need to listen. We need to know what they're doing. And as I shared with you at the beginning, FICO has validated this entire process. Because it's so fun for me, I'm going to read this one, but this is Glenn Grossman from the FICO Business Origination. Now, remember, an origination is like a mortgage origination. It's the group who specializes in providing software to lenders so that they can approve business credit. Merill Chandler knows more about how to use the FICO score than most FICO employees do. FICO provides the analytics and creates a score, but Merill shows business owners how to apply the FICO metrics in their financial lives. Merrill's approach is distinctive and far more impactful than the myriad credit and funding services and personal finance websites. Also, David Smith, he is the key account partner and small business segment leader in FICO, and he is the subject matter expert for the business score, which they call liquid credit, and the SBSS, small business scoring service. These guys are powerhouses inside of FICO who share with me the updates that are going on in the lending world so that we can steer the ship in the direction that is going to get you the most approvals, regardless of what's happening in the economy. So much so that David Smith joins me. We have in our group, in our coaching programs, we have a twice weekly Q&A and strategy sessions to answer questions and keep everybody propelled forward. He joins me out of 8 in a month. He joins 3 to 4 of them and weighs in on what's going on at FICO, what's happening at the business conferences and the lender conferences that he is attending. And he comes to my group, reports that, and has gone through everything. A little more on him later and some of the things that he said. But you guys, we have a seat at the table. We are dialed in to exactly what lenders are looking for to get approved. And this entire system that we're talking about today delivers on the FICO validated process. So let's kind of review. These are probably a daily reminder in each of your guys' lives, but there's 3 big problems that lenders, real estate investors have when it comes to getting these types of loans. So number 1 is that it's tougher to get approved. So let's kind of take a look at that. Access to lowest cost business bank loans and lines of credit is shrinking as the economy has a little bit of stress. In outer prosperous times, what we call outer ring approvals, those are okay during prosperous times. But if you get a stressed economy, lenders contract the approval target, right? That funding target, that approval target, it gets smaller. So wherever you were, it gets more difficult to get an approval. So what worked before isn't going to work now. And so what we want to do is go from this to this. Now, this here is what I call prey approvals, as in PREY approvals. You can be one of two things to a bank. You can be prey or you can be their partner. And the way you know what you are is prey is low approvals and high interest. All your credit cards, right? You get a 5, a 10, even a $20,000 approval, $30,000 approval, and it's even if it has a 0% interest for a short time, you're still at 22 to 26% interest. Those are prey approvals. Partner approvals are the credit lines we're talking about. Prime plus 1%. Right now, that's 8.5 to 9. And that prime plus 1% actually with higher approvals. So you're talking $50,000 to $100,000. So that is the type of borrower we want to be. And you cannot, it's not versatile. This is not credit card stacking. We're talking about versatile credit lines where you can write a check and you can do a deal. So we want to go from this to this. And that's what it means to be fundable, right? You get fundable when your qualifications for an approval are near that bullseye. But this makes you an ideal customer. How many of you would love to be an ideal customer for your bank? I mean, literally where you get whatever special they're running for the month or the quarter, you're on that list to get a notification because you are a spectacular borrower. That is what we want to experience on the regular. So the other thing is you get the best approval rates, terms, and limits when you are what I call a bullseye borrower. So this happens in any economy. Notice what happens. If you're a bullseye borrower, it does not matter, you guys, when whether the economy is abundant or when it is more scarce and tighter, you will get the approvals. So when you meet lender approval guidelines, you get better, faster, cheaper, and higher credit lines. Okay. So the second big problem is that, as we mentioned before, real estate investors have been blacklisted. You guys look at this list: cryptocurrency, check cashing. These are all big, fat, hairy no's when you try to go for an unsecured stated income business line of credit. You might, if you have a long-term relationship with a bank, you might get an approval in any of these categories, but it's either going to be secured or it's going to be full doc. But we're talking about very inexpensive, fast money. And so door-to-door sales, credit restoration, payday lending, gambling, adult entertainment, real estate investing, horoscope, multi-level marketing, charities can use this strategy to get funding, but traditionally nobody's going to touch them. And so here's what's even shocking, and I'm going to give you a list. Take a screenshot here in just a moment. But even your business name can be a approval killer. It can kill your funding opportunities. So take a screenshot of this, because if your business name or its purpose has any of these words in it, you are already unfundable. Don't shoot the messenger. But now there are reasons why you may have tried in the past and not been able to get these before. So take a screenshot of that. What we need to do is you get these higher, faster approvals if we separate who you are from what you do. Let me say that again. We must separate who you are from what you do. You walk into PNC Bank and you go, "Yep, I'm a real estate investor." And they're going to be like, "There's the door for these unsecured stated income business lines," right? Or they're going to shuffle you over to a full doc, and some of us can't go full doc or don't want to go full doc. And all of a sudden now we're kicked out of the game. So more, higher, and faster approvals happen when you become funding backstop, and and your business is a highly fundable, unrestricted business. Now, big problem number 3, super simple. Don't got to spend a lot of time on it. Hard money and private money is expensive. And if you're like most investors, unless you're sitting on your $1 million plus cachet of money, you're using hard money or private money. And that is way more than 8.5 to 9%. And there's no points with this money. There's not even application fees to go for these credit lines. Okay. So, and as I spoke a moment ago, using hard money for gap financing to close those deals steals even more of your profit. So how do we solve this? It's what I call the velocity business funding system. So let me walk you through how this works. All right. There are 2 facets. There's preparing your business and then preparing you. So first, we optimize your business to maximize your approval amounts. So we got to find out exactly where you are so we can know the path to get these credit lines. Now, what's fascinating is, let's say Kansas City is funding town, right? Approval town. If you're in Portland, Oregon, or you're in San Diego, California, or you're in Miami, there are completely different instructions to get you to approval town, period. You're going to be driving on a freeway, but the directions are completely different. So we've got to find out where you are and how you are currently positioned so we can optimize that. The problem with this is most real estate investors get frustrated or angry when they don't know what a lender is looking for to get approved. How many of you have walked in and they go, business income, and you're like, okay, business income, is that top line? Is that bottom line? Do I add back depreciation? We ask a dozen questions that we honestly don't have the answers for, and no one's told us what to put on that line. Your personal income. Do you realize most people, since they don't know what gross annual household income actually means, they don't know, you put numbers that are lower than what lenders allow for you. So that's our problem, is we don't know what's happening, and your real estate trainings and your mentors have no idea what those answers are. So they haven't been able, they may have taught you how to do real estate investing. They may have taught you notes and tax sales and all the goodies that are putting wealth in your pocket, but they didn't know how to get the cheapest possible money. That's why Nicholas and Francisco have brought me in, because this is my jam. And you can tell that I'm not madly in love with what I do, because this is fascinating for me. All right. And I know exactly how to take you from A to Z to get those fundings. All right. So the solution we came up with was that to find out where you are is what we call a forensic fundability audit. Super simple. We review your income, assets, banking relationships, and your entities. We collect the current and vital business data that lenders are going to look at. We compare you against lender approval standards, right? And then we plan the steps to get you from one to the other. How do we get you to approval town? And you will know exactly what lenders are looking for before you even submit an application. There is no guessing. There is no question. We even have a cheat sheet where you walk in and it's on your phone, and we tell you how to fill out every single application. The truth, the whole truth, and nothing but the truth. But it's what lenders truly allow for. So you get to know exactly how to fill out every application and the answer to every lender question. The next step is we find out which entity strategy will work for you best, right? Some of you have companies sitting on the side that you haven't used in a while. Some of you have viable entities right now. We need to take an inventory and find out what strategy we're going to use. Okay. The problem with that is most real estate investors get super annoyed when they learn here that there is a way to set up your business when you started it to make you fundable, but that structure was not taught to you when you started your company. What your CPA didn't tell you, nobody told you. And so now all of a sudden, you're sitting here with an unfundable business and nowhere to go. So what we do is it's called QFE, a qualified fundable entity. We look at your candidates to select the best one. Super simple. We evaluate your entities. Forgive the typo. We evaluate your entities. We implement the strategies that are going to hit those the lender approval specs. And you don't waste years trying to building a relationship with a bank and with an entity that is never going to qualify. You guys, unfortunately, since we're not taught this early on, we don't know what check boxes to check in order to make a fundable entity when we start it. So the next thing is we take the steps to launch this qualified entity and we put it into our Velocity funding system. So problem is, I've had in discovery calls, I've had clients that are like, why didn't I know this 5 years ago, 10 years ago? Many real estate investors get pissed off because they didn't know how to separate themselves from what they're doing. And because they don't know how, all of a sudden they're unfundable and they don't know why. So I have total empathy, you guys, for going in and trying to get these types of credit lines and getting a big fat no, or getting a yes, but you got to go full doc and mortgage your house, or mortgage your firstborn in order to get the approval. So to solve that, we have a funding launch sequence that we put your entity through. And so now this is going to blow you away. Did you realize that when you hit submit on an online application for business credit cards and business credit lines, it pings 21 business verification databases to see if all of the data matches and you're not a spoofer or a fraudulent or a scammer trying to make money off the system. They put this in place, and literally, and it's milliseconds, but you hit submit and it's like ping, 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 ping. And the approval, even if you get approved, you could have had a higher limit if all of the data were available to you. So we research what your financial reputation is across all these databases. Then we compare your business identity against those data points. And then we optimize, again, big words. It's not hard, but there are boxes to check. We optimize your business identity so that we meet those lender requirements. And then we amend state and federal entity filings so that you're all perfectly suited for approvals. And this creates certainty that your entity is ready to be approved. Once we hit that, then it's time to open up your business bank accounts at the right banks the right way. Now, I'm going to give you a couple of tips and techniques that'll serve you in the future. It may be too late for some of your accounts, but real estate investors discover way too late that they didn't start their business banking relationships the right way, and they have wasted time with a bank that will never approve them, maybe even for more than even a credit card. So what is that? Well, we call it the Smart Banking Blueprint. And what we do is it helps you avoid approval killers that will get you denied. And I'll give you some examples and some stories. Provide exact FICO validated steps for opening a business bank account. It boosts your advantage by not falling for lender tests. And as I shared with you earlier, we even include a cheat code account opening checklist that checks all of the high value client boxes, those bullseye borrower boxes. So what do I mean by this? Well, did you know that lenders put up tests? All relationships do that. Before you got involved with your spouse or partner, we all test each other to see if you are who we want. Lenders are no different. And so when you go in to open up a checking account, here's the rub. They're going to offer you a check guarantee card, right? Or a check guarantee account, a overdraft protection account. They're not doing you a solid, guys. This is in the personal world and the business world. They're not doing you a solid. They're testing you to see how much of a consumer you are. And approving and saying yes to an overdraft account, it fails the test and indicates that you have borrower behaviors that are consumer based rather than strategic borrower based. And so turn down overdraft accounts. Then you want to call your bank, and it's not too late to turn those off right now on the current banks, but it's better to start an account by rejecting an overdraft account. The next thing you want to do is you also want to tell them to turn off the ability for a transaction to go below zero. Number one, it stops overdrafts, but more importantly, you're telling them, remember, I keep talking about check boxes. This is one of those check boxes that says, I don't want my money. I don't want to use your money that isn't part of a formal application process. I want to honor my relationship with you by not going through zero. You're also telling them that you have confidence that you will never go through zero. You'll never punch through that zero mark, which automatically makes you a more valuable borrower. Tell me you guys understand. Give me a yes in the chat or something. Am I making sense? Are you getting this? Does this make sense? Because there are dozens of these tests, and I want to make sure that you guys are seeing what I'm saying. You're picking up what I'm putting down. Thank you, Carla. Very good. Gene, thank you very much. So these are the type of tests that if we fail, we are automatically pigeonholed as a consumer, not a strategic borrower. Okay. So we want to make sure that we fall under the strategic borrower plan, and that's one of the ways that we do it. Now, the next thing, once we get an account opened that hasn't revealed to us that, or revealed to the lender that we are a consumer, then we implement balance and cash flow models that trigger the credit line approvals. So the problem is most real estate investors are furious when they learn how easy it is to leverage your checking account balances and cash flow that you already have. You already have money sitting in accounts. You already have money going through these accounts, but they're not helping you get approved because you're not hitting these, you're not checking the check boxes that lenders need to see, because there is a cash flow through a checking account flow process that strikes really powerfully when you hit those things. And from FICO, we happen to know exactly what those are, and then we can share them with you. Right now, it's different for every person. That's why I'll give you a chance for you to learn these things for yourself. It is not globally the same for every account because time at a bank, amount of deposits in the bank, all those things come to bear. How do we solve that problem? we call it bank approval optimization. So we find out what you're currently running through your accounts, and we direct you to change those to hit certain criteria. So we hit those check boxes, and that ensures predictable credit line approvals. Because imagine a lender, think of a lender sitting at the side of your cash flow river. They want to know how big the lake is upstream, your deposits, and what the flow is that they would be able to make their payments with. All of those have, they're not tricky, but they are customized. We also want to make sure that you're running those according to the appropriate timetables in a month, and there are formulas to all of that. Now, the last thing we do for your business is, now that you're running traffic and we're using your money right, we update all 21 business databases to accurately reflect your true business identity. And that makes you highly verifiable and approval ready. The problem is, most real estate investors get worried. They don't know what the databases are, none of these 21, and they don't know how to change the data or confirm what's being reported about them. We solve all of that with what we call a reputation management accelerator. And we optimize your business so you can present lenders with a perfectly designed business that is highly fundable, where you have already passed all of those lender tests. We guarantee that your business exceeds the authentication requirements of these 21 databases. And we even build your KYC file. That's know your customer. Lenders engage third party to find out who you are, to see if you're restricted. Well, we pull the rug out from underneath that process, because we set you up to not be a restricted industry, and therefore highly fundable. Now, the next thing we do is to maximize your approval amounts. We optimize your personal profiles, your personal, everything that to do with your personal profile, because you're the backstop. Problem is, some investors feel annoyed and disillusioned when they learn that business funding approvals are they're not based on you. I mean, they're not based on the business. They're based, how much they give you is based on you. And so this results in, I don't know how many times, you guys, you've missed out on an opportunity to get approved because you didn't position yourself in that funding approval flow. So what do? We design a personal approval readiness roadmap that gets you from here to there on a personal level. Now, what I didn't share earlier is that over 30 years ago, I was one of the co-founders, the original co-founders of Lexington Credit Repair Law Firm. I learned very quickly that your credit score does not guarantee an approval. How many of you have high 7s, 800 credit scores, and you're still getting denied for some important funding, especially these types of credit lines? Because the approvals are not based on your score, they're based on your profile. So we review your personal borrower profile, and a borrower profile, guys, is not a credit profile. It includes your banking relationships, your financial financial relationships, your credit relationships, etc. And what your scores are. So we assess those 5 fundability factors that lenders look at. We remove any of those approval killer landmines in your borrower profile, or set up the plan to do so, and we provide customized personal credit optimization to make sure you get the biggest and best approvals. Now, finally, we make sure you're confident and clear about how to apply for your business credit line. When you walk in there, not only do you have the cheat sheet, we have sat down with you and gone through the exact bank's application, you guys. This isn't just generic. We're sending you to the banks who love our clients, because we have sent them what is it now? Hundreds of qualified borrowers to get a yes. Our approval rate for first-time borrowers is 93% on the very first one. And if you get one, you get the others because you are in that bullseye. The problem is that real estate investors can be stressed about how to fill out that application to make sure that they get approved. So we call it the Pinnacle application launch. So we help you. You're prepared to answer every lender query with clarity and confidence, especially so you don't step on the landmines that they're going to put in front of you. They're going to test you every step of the way. You're going to complete every question on every application, so nothing is left to chance. You will know for certainty how to navigate these approval tests, and you will get higher and more frequent credit line approvals. Whew, okay. Everybody with me? All right, please type in there if you learned something new today. Is any of this anything that you could actually apply? If we never talk again, is there something that you have learned today that will help you in your funding life? Anybody? Anybody? We got yeses, we got nos. We're saying, all right. Thank you guys. Thank you very much. All right. How many of you felt like you're drinking out of a fire hose? Again, I'm trying. Thank you, Mayan, and thank you very much. There's Shantice. So if you're looking at a puzzle with 1,000 pieces, it's not difficult to put those pieces together. Sometimes it just takes a little time. And we have synthesized this process to make this go in as little as 120 days. So those credit lines are waiting for you based on how well structured your personal and business fundability currently is. But I'd like to share with you people who have sat in seats just like you. Our results don't lie. We've had other community members literally have amazing results. So I'd love, in their own words, Robert.
With the program, my personal credit score has gone up over 150 points. One of the things that I was absolutely astonished by was how easy it was when I walked into the bank and just asked for a sizable line of credit, and it was the easiest application to fill out, and it was the least amount of hassle and interrogation.
Hang on, I just got somebody say that they could not hear. This is important. Let me just reshare. And there we go. Share the sound. So thank you for saying that. Thank you for saying that. We'll start it. We'll start it over and share number 4. There we go.
Since starting with the
Can you hear now?
program, my personal credit score has gone up over 150 points. One of the things that I was absolutely astonished by was how easy it was when I walked into the bank and just asked for a sizable line of credit, and it was the easiest application to fill out, and it was the least amount of hassle and interrogation. I provided absolutely no documentation, and I was able to 2 or 3 days later get, a confirmation that they had approved the lines of credit for both of them.
I could not believe it, Merill. I couldn't believe it.
This was the second
I'm
round
sitting
of
there.
funding.
The guy pops up on the computer as he's, entering the data, and he's like, "You qualify for a $20,000 line of credit card, a business credit card." I said, "Yeah, you know what? Let's do it." He said, "There's no credit pulls. There's no way." I'm like, "Yeah, let's do that." Then he goes a little bit further. They're saying that you qualify for up to $100,000 line of credit. Would you like to do that? Yes. Yes, I do. Next thing you know, $50,000 they approved. That's awesome. That day that they pulled the credit, they use Experian. My Experian credit score that day was 848. There it is. It was like perfect.
So let me explain a little bit. He was approved for up to the credit lines I'm talking about are $100,000 credit lines. Think of them like construction loans. Especially if you don't have a current relationship with that bank, and you may not, because we're going to send you to particular funding banks. But think of it like a construction loan. They're not going to give you the whole $1 million up front. They're going to give you an advance. So, first disbursement, make sure you put in the foundation, you put in the framing, you don't run off to Vegas and put it on red, right? So then they give you more and more as you have proven how to use these credit lines. Fascinating thing is, most of these credit lines have a 3-year re-up, meaning you got to reapply. But we have not had including myself, we've not had a single client have to refill out an application after 3 years of use because they're like using it perfectly. I give you the guidelines on how to use these credit lines so you have maximum effect. And you still are the bank's favorite customer. And so they don't care. You're using it well. They don't care that for you to reapply. All right. Next, this was a little higher.
I did what you said to do, just a couple of things, and my score went up 30 points right away. And so within 6 months, my score went up over 100, and I was already in the 700. So my score's nearly perfect now. And they all line up, and I was able to achieve, a $500,000 unsecured line of credit my first time out of the gate with my first bank. So that really put me in a position to change the game that I'm executing to change my retirement strategy. And in fact, I actually used the line of credit recently for the first time, so it put me into $1 million asset that I would not have been able to secure. And in fact, the bank, I was putting all the documentation together, and they called me and said, okay, we're done. And I said, don't you want the paperwork? And they said, no, your credit score is fine. In fact, it's unusually fine, so we're just going to give it to you. We don't need any more paper, and it'll be an unsecured line of credit. So $500,000 later.
No documentation. She was prepared. No documentation after they reviewed her business and personal profiles. No documentation at all. Yeah, I'm celebrating with you, Carla. This is wicked cool. All right. So even more. The gentleman, when I told him that I had $2.4 million in these business credit loans and lines, Michael said, dude, I'm going to beat you. And he did. It took him 18 months, but he got $1 million in unsecured bank loans and lines of credit from several banks, and a $2 million real estate credit line portfolio at the bank that he had already had a $200,000 unsecured credit line. They saw how he was using this, and he goes, well, we got this, and so he literally takes down a property, puts it in the pool. These are, you might be familiar with pledge loans. They don't even do a mortgage on these loans. They add it to a list of pledged properties while it's in rehab, and then they come out of the pool and get sold out on the market, and he just drops them into the pool, adds them to the pledge, and then moves them out. No taxes, no financials, and no income verification. $100,000 unsecured bank credit line and a $95,000 unsecured bank loan from Dr. Nathan. No taxes, no financials, no income verification. One of my favorites was Aisha and Derek. $200,000 in bank credit line portfolios and $580 in just like we talked about Michael J, unsecured real estate credit line portfolio from the same bank that they had the unsecured. When you have fundable reputation, you guys, they are going to lend to you. And so they got a $580,000 real estate credit line very similarly, and I help them negotiate these lines as part of the part of us working together, right? And then Jason, another medical doctor, $100,000 unsecured. Actually, we need to update that. That's it is now a $300,000 unsecured bank credit line, 150 commercial credit line, and I helped him get he does retreats for doctors to how to optimize their business, their medical practices. And so he bought a retreat lodge in 624. I've been to this beautiful, beautiful lodge, and I helped him secure that because when you are and it was a business, it wasn't personal because he was using it for business purposes. So when you are highly fundable, you are highly fundable. And then, as I promised, David Smith, in his own words, he's the FICO Score business segment leader.
A metric where, 100% of the people, if they follow this plan, have gotten accepted for loans or loan products, lines, or whatever. If you were at 75%, I would still say, hey, go use this guy, right? But you're not at 75%. He kind of cracked that nut. You figured, you've got the decoder ring and you're figuring this out.
He's referring to the number that we have in the last 9 months, we have 100% approvals.
Yeah.
For people who followed exactly what I indicated for them to do in their coaching process. It's 93% for those few people that went off the reservation.
Right. Yeah. No, and again,
they went,
I'm buying at 93%. I'm buying at 85%. I'm buying at 75%. But no, you're far too accurate. You've cracked the nut. You listen to what the underwriters are telling your people, and you're putting that back into the system, and that feedback loop goes a long way.
Oh, man, yeah.
And Merrill's just a hound about collecting that stuff. He's like what your customers, if you call them that, I don't know, clients, the ROI from what they're paying to what they're getting is ridiculous. They're not paying enough for your service. Seriously.
Okay, and that's at the annual, what's called FICO World. Every year, I go to FICO World to meet with the business funding and personal credit teams to optimize what I bring to you if you were a member of my community. So, very simple. I got no hard closes, you guys. What do we do now? Simple. Just schedule a discovery call with me and let's explore your situation. So you can go to schedulewithmerill.com, or that QR code will take you directly to my discovery call. I would love to spend some time with you. I do require that you come to this with your MyFICO credit report. Nope, I do not take Experian credit report. You're going to learn a lot of things here, guys. MyFICO, I want to know that you guys have access to the scores that lenders are using, not just consumer scores that different credit bureaus publish or that you get on Credit Karma. Those are useless. They're not lender scores. And you'll learn more about that as we communicate. But it'll give you the links and how to order a credit, how to order the right credit report. So you guys, thank you for joining me. And again, Nicholas and Francisco, thank you for having me here. And I'm down to answer any questions that you guys have.
I have a quick question, Merill.
Go.
So basically, I did miss the first 10, 15 minutes, but it basically what it sounds like is you pretty much get us credit worthy from the eyes of the lender to be able to get funding and access of that, right?
That is correct. In fact, I don't like to attach your worthiness to your credit, so I call it bank ready. But it is in essence the same thing. We make you bank ready. Here's what's fascinating. I was talking to Nicholas before I met with you guys, is that think of it as we package you so you can go to any lender and know what what's going to happen. Know what the approval guidelines are and how to do that. And we have education things, we have group coaching, we have one-on-one coaching, we have tons of options for whatever you guys need. And we will suss that out in your discovery call if you're interested. But the bottom line is, it is more powerful for you to be bank ready for any bank, because you know what every bank is measuring, because they all use FICO software. Everybody with me? The headwaters of your approvals is FICO approval software. What bank is using it doesn't matter. We're guiding you to check all the boxes that FICO's use. Does that make sense?
Oh, yeah, 100%. No, yeah, I feel like this is very advantageous. And you mentioned coming to the call with your My FICO score. So is it best to just go on that website, pull it, and then?
Yep, myfico.com, myfico, FICO.com, and get the middle one. If we work together, I will want you to upgrade to the premium, because we want monthly updates. But for the first one, until we find out what we might do together, just get the middle one. I think it's called, I don't know. It's the middle one. It's $29. $29.
Okay. And then my last question is, because some of the testimonial videos mentioned that, they did what you told them to do, and then their credit score raised up a couple points. Some guy even said 150.
Mm-hmm.
You don't have to say the whole sauce, but can you describe some of the things that you recommended that increase their credit score?
Absolutely. So the first thing, Nicholas, if it's okay, I would love to share something that'll kind of weigh in on this for you. If you guys can hear, I'm going to stop. I'm going to stop the share for a second so that you can see me a little bit bigger. And go into Zoom and make my thing, pin me so that you can see this. But I'll show you exactly how we did that, right? The details are based on what happened, what's going on in your profile, but I'll share it with you. First of all, this line right here, we call this a denial threshold. Now, some of this, I cannot not speak the language, but I'm going to try and make it as simple as possible, right? The denial threshold, let's say every bank is different, but let's say that is 720. So if you are a 719, you are not going to be offered anything anywhere from that bank ever, because you don't hit their threshold. So a credit score is used to put you in the game or keep you out of the game. Does that make sense? Listen carefully. It does not approve you for anything. You have never been approved by any credit instrument using your credit score. Even mortgages, it determines the rate and term, but you can get approved. You just have a higher rate. So that's what we're going to talk about. Denial threshold. If you're getting offers in the mail from banks, it's because when they pull your credit score, you're above their denial threshold. Okay, number one. Number two is here. This area is lender approval software. That means once you're in the game, lenders use their criteria, not FICO, not your score, not anything. There are 40 plus or minus borrower behaviors that are measured. You are approved based on your borrower behaviors, nothing else. Borrower behaviors, and there's 40 of them. Now, in fact, let's do this. You guys, is it okay if I over deliver?
Sure.
Write this down. Go to and let's put this in. Are you still here? Are you still in the thing? All right, I'm gonna type it out. Get fundable Get fundable behaviors. Get fundable behaviors.com. Get fundable let's make sure I spell it correctly. Getfundablebehaviors.com. Tell me where to send it, and you will get a complete list of, there is a pool of 150 borrower behaviors that every lender in the United States draws their underwriting criteria from. Does that make sense? 150. Most of them choose approximately 40. We optimize your borrower behaviors. We optimize for all 150 so that we don't care which bank you go to. All right. Now, the last thing for us to understand is that if you're approved, then your score equals approval amounts. It determines whether you get a 200 or 2,000 or 20,000 or $200,000 approval. You with me? So we can't, because we can't go into all the borrower behaviors today, but this is why those guys are receiving 30, 50, 150 points, because we're going to review your personal profile to find out where you're not getting borrower behavior points and what you need to tweak in order to get those points. Does that make sense?
No.
Okay.
Wow.
The other cool thing about this is that those borrower behaviors, there's a 24-month look back period. It's a rolling most recent 24 months. So you can change your borrower behaviors and they start aging and you get credit for the new borrower behaviors. You with me? Does that make sense? So that is how you guys get approved. Mortgages, auto loans, credit cards, business lines of credit, 100% of them go through this process. There is no exception.
Wow. Well, you're gonna see me on your schedule pretty soon.
Very good. Glad to have you there. We'll have some fun. Thank you for joining us. We have Shantice and Mayan and Jean and Carla, John. You guys, it's been amazing to have you. Any other questions? I'd love to answer any questions.
I think Carla has one, and then I think
And Jean, you're on mute. I see your lips moving, but I don't read them.
Oh, I just said I don't have any questions, but thank
Oh,
you. Appreciate
very
it.
good. Carla, go for it.
Okay, now, it's with someone that has poor credit, and do you have programs for that when they have to start at rock bottom?
Yes. Yes, we
Yeah.
do. And that would fit into our education pieces and or your group coaching, because group coaching is designed to get access to the software you need, all the tools that you need, but we may take a little longer because we got some cleanup or some optimization to do on your personal profile. But there is not a soul on this planet that does not fit in my community and embraced with open arms to make you and help you set goals and achieve those goals so you can be fundable and approval ready as soon as possible.
Okay, thank you.
Absolutely. Come and talk to us. Anybody else? Everybody, raise your hand if you're getting on the schedule, because I'd love for you guys to be able to at least see what your options are. There we go. All right, we got Francisco. Very good. Carla's going in there. Excellent. Any other questions before we finish?
no, I think you did great, man.
Very good. Well, thank you again for having me, and love that Nick and Francisco. Nick, I love your community. Glad to have them, and we can be able to revisit this at a different time and do even a little deeper dive, because there's so much that we can do. You have total, let me end on this. If you knew what all the check boxes are that a lender needs to say yes to you, and you knew how to check those boxes, who actually is in charge of your approvals? Yeah, you are 100%. Well, we know what the check boxes are, and I'm happy to share with you how to check them. We are not that one of the greatest misrepresentations in business financing is that we don't have control over our approvals. We have absolute control. We just need the intel. So thank you very much, you guys, for allowing me to join you. And I know this time is precious for you guys. So big hearts back to you, Carla. And you guys have a spectacular rest of your day.
Awesome.
Thanks.
See you
God
guys.
bless.
See you guys later. Thank you.
Bye.